A bit of bad news, good news to start this week's SD Bullion market update. The fiat Federal Reserve note, most often miscalled the US dollar, continues devaluing in real purchasing power at rates not seen in nearly 40 years of time. Good news is silver and gold continue being mispriced, discovered by outsized derivative and fiat financialized markets that act currently as having little to no clue on the capital flow comeuppance to come. In other words, investors can still get physical precious metal positions at comparatively low historic valuations to other asset classes, propped and stubbornly still hovering in bubble status. Prices reportedly increased near 1% from May to June 2021, signifying double-digit inflation using the government's hedonic, quality-rigged, underreported inflation figures. Jim Bianco had some insightful long-term fiat currency devaluation charts to share this week on Twitter. In these following two U.S. inflation charts, he used 6-month changes annualized to remove the quote-unquote base effects. Taking out food and energy, two items we almost all need to keep our standards of living going, here's the 6-month rolling price increase over the last 60 years of time. Now here we add in all factors using the government's CPI basket of inferior goods and services. Again, we see about 40-year highs in rolling 6-month price inflation data, and again, this is using the government's underreported, hedonically adjusted, rigged inflation data. The fiat currency head of the U.S. Treasury does not seem too worried about more months of inflation ahead. Just have a listen to what she said on CNBC this week.
So when do you think it'll settle down?
Well, I think we will have several more months of rapid inflation, so I'm not saying that this is a one-month phenomenon.
All's well, I suppose. Janet Yellen seems fine. Hello there, on behalf of SDBullion.com, this is James Anderson with a quick SD Bullion market update. Before we go further, please smash the like button so other sound money stackers can also see this content. And be sure to subscribe to our SD Bullion channel so you can get our latest market coverages and also a chance at winning incredible bullion giveaways like this one.
Raise your hand if you like free stuff. We were going to give away a free tube of the brand new 2021 Silver Eagle coins. Then we said, nah, make it 25 tubes. SD Bullion is giving away a monster box of 2021 Silver Eagles. How many coins are in a monster box? Let's just say one lucky participant is going to be showing off their best celebratory dance moves with 500 shiny new silver bird friends. So head over to sdbullion.com/sweepstakes for your chance to win.
Click the link below to enter your chance at winning this 2021 SD Bullion Type 2 American Silver Eagle Coin Monster Box giveaway of 500 Silver Eagle coins. Official sweepstakes rules can be found at www.sdbullion.com/sweepstakes. Good luck to all of you who enter and for your chance to win. Silver and gold spot prices had a mixed week. The gold spot price ended with a slight gain on the week's trading action, whereas the spot silver price had a big sell-off to close the week, trading down nearly 1 fiat Fed note per troy ounce over the last 24 hours. For discount silver bullion buyers out there, keep an eye on the spot silver prices opening in early next week for potential discount bullion buying opportunities. The gold-silver ratio reflected much of what I just told you, closing the week breaking above 70. That is the highest this key monetary metal ratio has been since the Reddit silver squeeze phenomenon began in late January 2021. Now, speaking of the silver squeeze, I think it's important for you all out there to continue seeing how the mainstream financial media is framing the movement as it goes. Following up on their written article late last week, Reuters did a quick video synopsis on the Reddit Wall Street silver squeeze phenomenon. Let's have a look at that here.
Kerry Craker has worked in kitchens all his life. Since March, he's spent around $100 a week, half his spare cash, on silver coins. He's part of a growing social media movement who say they are buying bars and coins for protection from a coming age of inflation.
There's a little anarchy in it. It's like, okay, we're done with you telling us what we can do and what our money is and what our money isn't. We've decided that this is actual money.
The core of the movement is a 122,000-person-strong Reddit community called Wall Street Silver. Formed in January at the time Wall Street Bets was marshalling an uprising of ordinary investors against the financial elites, creating a trading frenzy around companies like GameStop and causing pain to big investors who dared to cross them. Investors like Kerry Craker want to do the same thing with silver. Market professionals, however, say they're unlikely to succeed. There is plenty of silver, and central bankers in the US and Europe expect inflation to stay relatively low. But bankers aren't getting through to this group.
I'm pretty sure that the uppity-ups in the banks and the COMEX and the LBMA just think we're just a bunch of, street trash and that we're just going to quit or give up or something, but I don't think that's going to happen.
Reuters spoke to more than 20 members who call themselves silverbacks and apes. Their homepage features an image of an army of primates from Planet of the Apes. They say things like ape-like shiny. They organize raids, days on which everyone buys together. The group's founder is Ivan Bayuki, a 24-year-old Canadian.
Wall Street Silver isn't just a get-rich-quick scheme. You really need to prepare and educate yourself and start preparing yourself for the future. So we're not trying to emulate Wall Street bets where we just pick a couple of stocks in the market and then just pump and dump them. Nobody is selling silver.
Silver costs around $26 an ounce. Stackers think the price will rise as inflation erodes the value of currencies. Demand for silver rises and supplies run short. Some say that by buying up bars and coins, they can jack up prices by 100% or even 1,000%, to the point where they can call the shots against the so-called bullion banks, the large financial institutions which lead trade in precious metals.
If it's such a small market and the masses start waking up to physical gold and silver, that market will be depleted instantly and that spring will explode.
Of the 39 analysts and traders polled by Reuters in April, only 7 thought silver prices would average $30 or more in 2022. The highest average that they forecast was $44. Yet, Redditors are unmoved. Wall Street Silver issues a deluge of tips, analysis, memes, photos, and encouragement. It is far from one of Reddit's biggest communities, but it is frequently in the top 20 for volume of posts per day. For people like Craker, the movement represents a much-needed disruption in a system marked by disparity.
We're just getting poorer and they're just getting richer and they are not explaining why. And there's some pretty pissed off people. I'm not super pissed off. I'm just fascinated and I want to play.
That clip was courtesy of Reuters' YouTube channel. Stick around before the end of this week's SD Bullion market update. We'll play a fun, short Wall Street Silver meme spoofing a classic pop culture comedy, mocking our phony derivative-driven price discovery commodity markets at present. But before we do that, the Fiat Federal Reserve balance sheet keeps climbing, and it's unlikely to ever be unwound. You can see here on the left-hand side the exponential rise during the 2008 global financial crisis. As well, you can also see the pathetic attempt to unwind the Federal Reserve's balance sheet in 2018 and 2019, only to have it basically double in size since the pandemic hit in early 2020. The following clip is courtesy of this week's PBS Frontline documentary on the outsized power that the private U.S. central bank has over average citizens' lives at the moment. Here's one of its most apologetic employees, Neil Kashkari, shirking responsibility for the supposed regulatory mandates that the Federal Reserve is supposed to fulfill.
This is the second time in 12 years that you and your institution have had to funnel into the financial system trillions of dollars. And there is this sense that the financial markets have an ironclad backstop from the Fed.
Well, I completely agree that it is unacceptable that 12 years after 2008, we had to do this again. I am proud that we did what we did. It was the right thing to do. It was necessary. But it is unacceptable as an American citizen that we have a financial system that is this risky and this vulnerable.
But what, if any, responsibility or accountability does the Fed have for the financial system having been so risky and so vulnerable to a shock?
Well, I think all financial regulators that have a seat at the table have responsibility for what was left incomplete after 2008 and where we go from here. We need to use this crisis to finish the work that we did not finish after 2008.
With all due respect, I wonder if you could be a little bit more explicit with me. What will the Fed own when it comes to the vulnerability of the system?
Well, I reject the thesis. I actually don't think it's been the Fed's monetary policy that has led to these vulnerabilities. I think it's been incomplete regulatory policy that has led to these vulnerabilities.
That's an idea Kashkari expressed repeatedly to me, that there are other actors responsible and larger economic forces at play beyond the Fed's decisions.
Pam and Russ Martins of WallStreetOnParade.com point out that over the last 15.5 years, the Federal Reserve has approved 3,576 bank mergers. It has denied not one proposed bank merger over that same time frame. One business day after President Biden's executive order warned against bank concentration, the Fed approved yet another bank merger. They go on in this article to state that, quote, the decline in the number of overall banks fails to capture the gargantuan concentration of assets at just 4 banking behemoths: JP Morgan Chase, Bank of America, Wells Fargo, and Citibank. According to the March 31st, 2021 report from the Federal Reserve, just 4 banks now own $9 trillion in assets of the total $22.56 trillion in assets owned by all 4,978 federally insured banks and savings associations in the country. To put it more poignantly, the 4 banks represent just 0.08% of all the banks in the country, while controlling 40% of the assets. And now the Fiat Federal Reserve is pushing for a new fiat central bank digital currency unit, often called FedCoin, which will likely result in even more bank concentration once it begins being issued, likely later this decade. To end this week's SD Bullion update on brighter news and trends building, the Central Bank of Brazil continued the trend of emerging market countries going long gold bullion reserves, adding 41.8 metric tons to its official gold reserves in the month of June 2021. To put that gold buying into perspective, that is akin to buying 3,600 of these 400-ounce gold bars you see here. In terms of the largest net monthly gold bullion reserve buyings, 6 to 7 of the largest 10 gold bullion buys of the last decade and year have happened just in the last few years. This trend is unlikely to slow, in other words. Now turning to the base that the spot silver price has been building over the last near 1 year of time, my belief is it will ultimately be resolved in medium and long term strongly to the upside. I say this confidently knowing that the aggregated Eastern trading price of silver is still hovering around 226 fiat Federal Reserve notes or fiat US dollars per troy ounce. Here's this same chart on a logarithmic scale, and my contention is that the red silver spot price line is going to again meet the blue Eastern aggregated spot price line, as it did during the 2006 into 2008 run and as well in early 2011 silver run. The question for me remains, how high above the seemingly ancient silver price high of 50 per troy ounce will this rendezvous reoccur ahead? Now finally, as promised, the following is provided by meme maker Creflo Silver, spoofing a classic clip from the 1990s comedy The Big Lebowski, making fun of the current artificial state of silver and commodity price discovery markets.
Is this a silver shortage, COMEX? Is this a silver shortage, COMEX? Man. Is this a silver shortage, COMEX?
Ask him about deliveries, man.
Is there a shortage, COMEX?
Is that SOV silver in the vault?
Is there a shortage, COMEX?
We know there's a shortage. Where's the flippin' silver, you little brat?
We know there's a shortage. We know you're not doing deliveries.
Per ditch the deep state.
We know JP Morgan emptied the vault. And the SOV CFO resigned.
The day before signing off on Q2.
You're killing Jeff Christian, COMEX. Fine. This is pointless. Time for plan B. You might want to watch out that front window, COMEX. Son, this is what happens when you warp a spot price in the futures market. Do you see what happens, COMEX? Do you see what happens, COMEX? This is what happens. This is what happens when you resist the market, COMEX. Do you see what happens, COMEX, when you warp a spot price in the futures market?
I tamp you down. I tamp you so freaking down. Hey, that's the most underpriced asset on earth, man.
And as always to you out there, take great care of yourselves and those you love. If you enjoyed this content, be sure to give our video a thumbs up. To keep getting bullion-related news and industry insights, be sure to subscribe to our channel. Finally, hit that alert button so you know when we publish fresh content. Give us your thoughts in the comments below. Let us know what you think and which topics you want to hear more about.